Okay guys, by popular demand, a lot of people have been wanting to see my strategy, so I'm going to break down the exact strategy, couple of moves that I'm going to be using to get the 1 million in funding. The series that I'm documenting on here, live in front of you week by week, I'm going to be showing you my exact strategy, breaking down and answering all the questions that you guys had about it. There was a lot of people that were skeptical about whether my strategy had an edge, and I'm going to show you in this video now. Obviously, I'm showing you a couple of examples, and you need to do this over a longer sample size. You need to have a lot of sample size of trades to have an edge, and I have done this and got this data, which gives me positive expectancy. So in this video, I'm showing you a couple of examples, but make sure if you're doing backtesting your strategy, you have a large sample size. So the first strategy, as you guys would have seen me use, is the pullback move. So we want to see multiple days overextended towards the upside or the downside, and this is just to get our daily bias. This is just the first stage of any strategy. You want a bias. Are we likely to go up or down at a certain period of time? So as you can see, we're starting to decelerate. We've had multiple days overextended. We want to come into a key level, supply and demand, support and resistance, however you trade, and identify some kind of rejection or reaction at a certain level. So you can see the candles are getting smaller. We've got multiple days towards the upside. And we want to see, again, another doji candle at this level. We want to see a reaction. So at this level here, you can see we've got some kind of rejection. Now, some of these levels are subjective. You know, there's lots of levels, there's lots of areas. But overall, are we overbought or oversold? Is there a key level where we sold off from before? And then we want to get a daily bias. So this isn't the entry model to start with. This is just to get the bias. That's all trading is. Are we likely to go up or down? That's all you're betting on. So you want to have some kind of reasoning for, or likelihood, that it's going to go in the direction you intend. So the first thing, as you can see, for the first strategy that I use, overextended move, multiple days towards the upside, key level, bearish first bearish day. What are we likely to see, or what do we want to see? We want to see some kind of continuation to the downside from this level. So we had the next day. Then the next question is, how do you enter this move? If you get this correct and you can predict these moves, how can we enter these moves? So we had multiple days towards the downside. The direction was correct. Now, how can we enter? And that's where your entry model comes in, and everyone has a different entry model. But that's how I identify a daily bias. So now, again, we want to see some kind of continuation to the downside. Remember, this is just the overextended play, the overextended move that I play. So again, multiple days towards the downside going in one direction. We had some kind of deceleration at a key level. It's important to be at a key support and resistance or supply and demand zone on an area of influence. And again, we've had some kind of hammer candle. You can say we've swept the low. But I would just play off this one candle. We've decelerated at this level. So now what am I predicting to happen? Again, not the entry model. This is just to get my bias. Is it going to go up? Is it more likely to go up or down? That's how you get your bias. So overextended move towards the downside, similar to this one, but we're looking for the next day to be bullish from here. Then we can scale into the lower time frames and find our entry, which I'll show you in a minute. So keep watching, stay tuned. But once we've got identified this, we're looking for the continuation to the upside. So that was a bullish candle. That was a bearish candle. So would we have been able to capture this move? And that's where your entry model comes in. If we keep playing, again, bullish engulfing at this level, we would look for a continuation to the upside. Again, overextended move, multiple days towards the downside. It's nice when it's clean, because you know markets only move in trends. So they move in a downward trend, they move down, pull back, lower low, lower high, lower low, lower high, lower low. So you want to be capturing the overextended moves here. And we capture the trend continuation moves, but I'll show you that later. So once we've got the candlestick pattern, what are we predicting for the next day towards the upside? So yes, that was correct. We got the daily directional prediction correct. Were we able to capitalize on this move? Again, everyone's entry model is going to be different. I'll show you mine in a minute. But we're looking for the continuation to the upside, which did occur. Our daily bias, we need to identify because this is the daily time frame, what are the lower time frames doing? What do the lower time frames do to make up these candles? Now, each one daily candle is a trend on the lower time frames, the 1 hour, 15 minute. Each one of these candles makes up multiple intraday candles. So what we're likely to see here is we would have seen a downward trend. Sorry about my drawings. So this would be on, this is the intraday time frames. Downward trend like this. Then we would have got some kind of trend change. Then we would have pulled back down. Then we would have broke out again. And all this is a trend on the lower time frames. My drawings are absolutely terrible, so I do apologize. But you get the point. Each one of these candles is multiple intraday candles, and in order for this to be bullish, this has to be a trend. So if I zoom into the lower time frames, you can see at the area, we had some kind of trend. We were consolidating, we were going down. Our initial entry would have been here. I mean, we wouldn't have got an entry based on my model. But then, as you can see, we've consolidated. And now, making higher highs, higher lows. So once we can identify the likelihood of it going in our direction, we can then look to capitalize on the run or the trend on the lower time frames. I capitalize on this run if I'm predicting, like for this example or this example, I'm predicting this to go towards the upside based on this bullish engulfing candle. I'm predicting the lower time frames to have changed trend and to look for the continuation in an upward trend, because I'm looking for a bullish move to the upside based on the bullish engulfing at the key level. So I'm looking for this to make higher highs and higher lows. So if we make a high, low, higher low, higher high, higher low, which we got when I showed you. Now the way I enter, and it varies, because this is the concept that every trading strategy has. I mean, there are some differences, every strategy is slightly different, but my entry model would be a fib, 0.382 rejection, and 1 hour 50 rejection at the same place, as well as the pivot. So I would look to capitalize once I've got my move. So this bullish engulfing would be this initial move, this initial breakout, or this initial breakout. This run towards the upside on the lower time frames would form this daily candle. So I would have my entry at the 0.382. I'd have my stop below the 0.618. And you can either target on the higher time frames liquidity. I target the daily 20 or the daily 50, or sometimes even the previous day's high based on the risk reward. And that's my entry model. Now you can get stopped out. It's probability. You can't predict all these moves. Sometimes they won't pull back. They'll just continue going. So for example, I've had this happen a lot this week, where I've had price break out, higher highs, higher lows. And instead of pulling back to the 0.382, it's just continued. So I wouldn't have been able to capitalize on this move. It's gone off without us, and there's nothing I can do about that. And again, some people might wait for price to pull back further to the 0.618, then take the trend to the upside, or wait for it to come lower. And they're all perfectly viable options. It's a way you can get into the market and capitalize on the daily bias. And I've heard people say, like, oh, let's say I got stopped out of a position. So let's say, let me draw this again. Let's say I am entering at the 0.382 level, which is usually my entry. If price is making higher highs, higher lows, like this, there's times where if you're waiting for the 0.618, I mean, this isn't the best drawing. Let me redraw this. Let's say, as you can see, my drawing skills are really bad. There's going to be times where if you have an order or look to enter at this level, and I enter here, I can capitalize on this move and take the winning position. There's going to be times where this comes down, stops me out, I lose, and you might enter, and it might carry on, and you might make money. But all the times that, and there's going to be times where we don't reject this level and we come straight down to the 0.618, where I don't enter, you enter, and then it continues lower and you lose. So no entry model is going to have 100% accuracy. No daily bias is going to have 100% accuracy. The point is to fundamentals of a strategy, you have to have a bias. What direction are you predicting the market to go in, up or down? And how are you going to capitalize on that move? And that's exactly how I capitalize on my move. So now, as I just described, we've got a daily bias, especially for this example. We've got the bullish engulfing. We're looking for the continuation towards the upside. So now what I would do, once I've got this daily bias at 10 o'clock when the candle closes UK time, I would scale into the lower time frames and look for an entry. Now, like I mentioned, the trend on the lower time frame causes each daily candle to be bullish or bearish. So as you can see, we're ranging. There wouldn't be an entry at this point. This is the bullish engulfing here. this is the engulfing candle which formed on the daily, engulfing this price. So now what I'd be looking for is some kind of breakout, making a new high, suggesting that the trend is changing. So let's fast forward. We can see we need to take out this high, preferably. Draw this, take out this high, because we're ranging. This is sideways. We've broken out. We've broken above the high. It's not clean, but it's breaking out. Let's fast forward. And we've closed above this high and pulled back. Now, could we have got an entry? We put our fib from this to here, the 0.382. We've rejected it. So you can either enter at the candle close, stop loss below here. Sometimes I can get a better price if I'm on the 5 minute and wait for a momentum play. And then you would target next liquidity, or for me, I target the daily 50 EMA for a lot of these moves. And in order for this to continue, we want to be continuously making higher highs, higher lows. So as you can see, we're pulling back. Could potentially look for other entries here because we're playing this upward momentum. And if we fast forward, you can see we're just going to be making higher highs, higher lows. This 1 hour 50 helps me identify the bias. Obviously, I look at price action, but this, if we break below the 1 hour 50 EMA, it suggests that sentiment's changing. And you can see we're trying to capitalize on this move. Could you have capitalized on a move here? Again, higher high, higher low, looking for the continuation. And this would be a 5% move. So now you're not always going to get 5% risk reward, but the premise and thesis is the same. Looking for the trend change, looking for an entry model, looking for a daily bias. So that's how I use pullback moves. I also do trend continuation moves, which would be trends like this. So let me rewind. You would be looking for not to go counter trend, because these are counter trend moves. You're looking for the continuation, so you identify what trend are we in. You can see we're making lower lows, lower highs on the daily. We've had, again, price action candlestick pattern, bearish engulfing at the daily 50 EMA, making lower low, lower high. So we'll be looking for a continuation to the downside, which we got. Now, it depends how far you want to target these moves. Obviously, there's levels in here which you've got to be careful of. Sometimes you can look for longer, big plays towards the downside, or you can just capitalize on this one move. Was there an entry? Let me double check. See, in this case, there wasn't an entry. We weren't able to capitalize on this move because it would have been here. And we never pulled back into the level. And again, someone said once, well, how do you negate this? Sometimes you can't. The only way you can negate this, and what I'm working on, is a swing trading strategy where I enter upon the daily close. So it'd be daily close, stop above the high, and then you can target these levels. However, I like to go with the intraday timeframes to confirm that the daily timeframe is likely to continue. Once I've got the bias, the direction towards the downside, I like to use the 1 hour time frame, which a lot of people do, whether you're doing it on the 5 minute to see a market structure shift, break down below the 1 hour 50 EMA, pull back into this level, continuation, and just look for the trend to continue, which would cause multiple daily candles towards the downside. So any other questions you guys have on the strategy, make sure you leave it in the comments below. I can make another video breaking down specific examples. I can even go over, I might make a back testing session. I'm going to go over a large sample size, speed it up, and show you multiple trades on multiple currency pairs, entering this model, entering with a daily bias, and showing you the results long term. But yeah, I hope you guys a bit of a different video. I'll be updating you this week on my Road to a Million funding series. Any trades I take, make sure you stay tuned for further on in the week. But yeah, I appreciate the support that you guys give to me. Like, comment, and subscribe if you did get value from this video. Trying to be real, open, and honest and show my whole journey live in front of you guys. So yeah, make sure I do appreciate you guys a lot, and I'll see you in the next one.